Okay, thank you. Yes, guys, and we are live. GST amendments Jan 2025. After yesterday's session on DT amendments, which was quite a cracking session, if you haven't seen it, please do watch it because discuss some really important amendments there. We are now back with the GST amendments. So let's begin. But before that, let me tell you a little bit about the GST preparation. The GST amendments are fewer as compared to the DT amendments, so that's good news. I will also talk about the important sections of GST, and from a GST exam perspective, what should you be studying? ABC of that also we'll be talking. All that and more will happen in this session. So, getting started already. I'm also good evening, everyone, and I'm also looking at the chat in case you have any specific thing that you want me to talk about. I'm also happy to talk about that. Otherwise, guys, on the Jan 6th, or sorry, on the 6th of December, and 1 month or some days to go for the paper, I hope things are good and things are going confidently. My advice to all of y'all who are thinking of one tip you can give for the last month is to study what you already know, revise, 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 and again revise because that's the key. And the more you revise, I think the better it'll go instead of doing something absolutely new. Of course, bearing this GST amendment. So let's start the GST amendment. Here we go. Just like yesterday, I am doing this GST amendment. This one is absolutely nice and it's very organized. I'll share this data with you and this book with you, but it is a chapter-wise GST amendment. If you can see GST amendments which are applicable for Jan 25 exams and they are done chapter-wise. So you don't have to worry. As soon as you finish a chapter, look at this and you will see exactly what amendment has been done so you can incorporate the same. Right, some of these you might already know. Some of these are be absolutely new to you. But remember, all these are important and hence you need to know them really well for your exam. Because just like you and me, when we go shopping and we buy something new, we wear that first. Same way ICI also has a habit. Whenever a new thing amendment comes out or an update comes out, they try to use that first. So on that note, these amendments are important and should be looked at whenever revising GST. So breaking that coconut and starting the GST amendment session right now. First up, a small update that your exam is in Jan. Of course, that's not the update. The update is that 6 months before that, that is up to 30th June, any changes that happened up to 30th June only will be considered. How does the ICI work this out? 6 months before. So July, August, September, October, November, and December. 6 months before your exam month, they stop any amendments, and anything that has come up 6 months within the 6 months will not be asked. So on that note, we don't need to remember this. I'm just telling you how they look at amendments. I'm going to zoom in and I'm going to go chapter wise. The first chapter of GST. Remember the good golden days where we learned how is GST applied, what are the different acts, what are the taxes that are subsumed. In that, there is absolutely no amendment or no change. So study that chapter the way it is through my handwritten notes, through my revision videos, and you'll be good to go. Next, we come to value of supply. In value of supply, there is one to clarification and there are one to additional things you should know. First, what is value supply? Whenever the government says that there is supply under GST, the government gets happy because the more the supply, the more the GST. And same way, the value of supply, the higher the value, the more the GST they get. So in value of supply, there are some couple of things that you should get to know. Example, I ordered a mobile phone from Amazon for 25,000 rupees and Amazon said that we'll deliver it to your house. That delivery is called free on road delivery. Some of them you might have heard of it. Some of them will be new. Now, when free on road delivery basically means that whatever the value of supply is, they will add the delivery to that only. So example, delivery charges are 500. They will be adding it to that only. And this will be the total value of supply. But sir, isn't this normal? Isn't free on road the normal thing? Yes. But in the exam, if they ask you something called X factory delivery, X factory delivery means that guy will not knock on your door. X factory basically means you need to go there and you need to get the goods. In that case, or you need to arrange for transport. In that case, 25,000 is the value of mobile. That is the value of supply for the mobile. And if you arrange for the transport, then separate, let's say 500 rupees transport. That is a two different supplies. That's why I'm just talking about it. In the exam, depends on what they will ask. My intuition is that the common one is free on road, and that is what they will ask in the exam. Next, there is a very thin discussion word here called included. So in the exam, I've noticed they use this word discount is included, already included. So I just want to remind you through this amendment lecture that already included basically mean they already minused it. Example, if you go to Zara and there's a t-shirt of 800 rupees and you ask the salesman what is the discount and they say discount is already included, means guys they already minus the discount. And this is the word called included. In case you want to add it back, you have to add it back. So anytime they use the word included, it is assumed that they've already minused it. Subsidy also included means they've already minused it. So how do you do this in the exam? I'll tell you. Whenever the word included is there and you're making an assumption that discount is already deducted, you can write as a small note that discount is already minused or deducted. So actually, there is no new amendments here also. I just wanted some clarity on these 3 points, and that's the clarity that you got. So happily do value of supply and just look at these 3 points at the end of the chapter. And now guys, the grand supply under GST. There is a new change there, but very, very simple. The whole GST, there are only two changes. When I come to those, I'll tell you which are remarkable. Otherwise, all the amendments are very, very, very simple. If you know, there is a term called actionable claim. Wow, what a fancy word. What is actionable claim? A claim that I can action out or a claim I can demand. Example, I owe you 1 lakh rupees. So you can demand that money from me. That's an actionable claim. I have won a lottery of 1 crore. I can demand that money. So that's an actionable claim. And actionable claim had gone to Schedule 3, whereby the government had said that on actionable claims, there is no GST. It is a negative list. If you remember, Schedule 3 was a list on which there is no GST. An actionable claim was put there except lottery, betting, gambling. Because obviously, on lottery, betting, gambling, there should be GST. If there is GST on your food, if there is GST on our lectures, why shouldn't there be GST on lottery, betting, gambling? Now, to lottery, betting, and gambling, to that club, they've added some more things. Casinos, again, same lottery, betting, gambling. Horse racing and online gaming, all your Dream 11s, etc., will also be subject to GST, which is pretty okay because in a way they're also lottery, betting, and gambling only. So that's just something they have added, that these three things will also now be subjected to GST. Exam perspective, they say lottery tickets. Will it be supply? Yes. Sale of horse racing, online gaming, all of that will be supply and will be subject to GST. Next, Pushpa 2 has just released. I'm sure you don't have the time right now to watch it, but if you happen to watch a new movie in a theater like PVR, one thing you will always joke about and have fun is the popcorn prices. The food prices is obnoxious. Now, when that food and beverage is provided in the cinema hall, is it a supply? Obviously it is, and it's a supply of service of restaurant service. That's a clarification that in a cinema hall also, when they give food and beverage, that is a part of restaurant service. The next one is kind of important. Hear me out. You purchased a mobile phone with a 1 year included warranty, automatic warranty, and if any damage happens to your phone, they will replace the part for free. So in 1 year, some green line came on your phone because obviously your phone is OnePlus, and in that one green line, you went to the showroom and they said, "Don't worry, it's under warranty. We'll replace it," and they'll replace it for free. Hear me out, and it's very easy actually. If they replace it for free, have they earned any money? Absolutely not. So there will be no GST on that if the replacement is done free of cost. But if the replacement of parts and service charges, they say, sir, sorry, this is not covered under warranty, or your 1 year is over, now we'll have to charge you. If they charge you, the government says, if you are going to make money, even I want GST. So that's how this is calculated. So in the exam, if they say replacement of parts and service charges under warranty free of cost, then there is no GST, no supply, absolutely no problem. Next, we'll take the same example of your mobile phone. You went to buy a OnePlus phone and you knew there is green line issue there. So people who don't know, OnePlus phones have a green line issue always. And your friends told you that, listen, take extended warranty. So OnePlus offered an extended warranty of 4,000 rupees. Let's say the phone is for 40,000 rupees and they gave you extended warranty of 4,000 rupees. OnePlus only gave it to you. Then this is a composite supply where they are both are naturally bundled and the principal supply is phone. So the rate of GST will be applicable as a phone's GST rate. But can it happen that OnePlus says, I will only sell the phone, but the extended warranty will be given by another company, let's say Cashify.com? Then in that case, Here is a GST rate on phone on 40,000, and this is 18% on service because it's a separate person. So it depends in the exam. If they say the same person has given you extended warranty, then it will be a composite supply, and the GST on the main supply, example, the phone, will be applicable. And if they say other people has given you an extended warranty, then that extended warranty is like a service. Important guys, this a D point is somewhere important and you have to know this really well. I'll share this PDF with you guys after the lecture gets over. I'll also share with you a prediction list and a GST very important section list. Next, very simple, no hassle here. A subsidiary company has issued shares to a holding company. Will that be subject to GST? Obviously not. Shares are securities. There is no GST angle there. Next, important but very easy. You took an insurance policy and the premium is 18,000 rupees. But the last few years you have not made any claim. So they are giving you a discount of 1,000 rupees and they call this discount a no claim bonus. So on which will be GST applicable? Obviously on 17,000. That means a no claim bonus is like a small discount. And you know the government's philosophy. If the insurance company does not make money, even the government does not want GST. So on this 1,000 rupees, it's like any other discount which can be minus. So I'm just going to tell you which are the ones which are important. The extended warranty one is important. The replacement of parts is important. No claim bonus is also important. So these three are important amongst you. The others are very small. HDFC Bank, your check got dishonored, guys. You know that typical thing which does bounces. In that case, if the check bounces, then there is a check bounce charge or check dishonor charge. On that, there is no GST because it's like a penalty. Fines and penalties collected by the government. Example, guys, you were on the bike, no helmet. In fact, there were three of y'all, none of y'all have a helmet, and the cop caught you and he charged you money. Even on those penalties, guys, there is no GST. But two things there will be GST. One, if you book a flight ticket, train ticket, etc., which is subject to GST and you cancel it, that cancellation charges will have GST. The government says, listen, Indigo Airlines, if you're making money on cancellation charges, even we want GST on that. And last, let's say, as part of my business, I wanted a supplier to supply me these pens by 31st December. All right, there was some internet issue. Guys, the internet also could not digest. Now, guys, everyone, so I was talking about someone supplying these pens on not on time. So I charged them a small fee for tolerating the non-performance of a contract. They had a contract, they did not perform as per it, and hence I charged a small fee. The government has a very simple philosophy. If you are making money of this kind of contract, even we want GST. So even on that, there is GST. Does esports tournaments include in online gaming? Esports tournaments, online gaming is any place where you can bet money. That's online gaming. So I'm not sure, Bharat, if esports allows you to put money, but the typical example of online gaming would be the Dream 11, the Rummy Circle, etc. All right, guys, moving now to the next one. Just summarizing this, supply 1, 2, and 3 are important. The others are okay. If you spot them in the exam, I don't think you'll have a problem discussing. Is going stronger from one chapter to the other, and we are now at chapter number 4, charge of GST. Guys, you go to McDonald's, you order a burger, 100 rupees plus GST. They charge you the GST, you're the customer, you bear the burden, you pay them and they pay it ahead. That was called forward charge mechanism. Next, there is a reverse charge mechanism whereby they will charge you GST and you are the recipient. R for recipient, R for RCM. You will pay the GST under RCM. I'm just going to draw, this is the supplier. They supply you, example, lawyer supplying legal services, and you are the recipient. You will not just bear the burden of the GST, but you will also pay the GST to the government. That means you will not, instead of paying the supplier, you will pay directly to the government. This mechanism is called RCM. Remember, the government doesn't mind whether it's RCM or FCM, because it's like going to a restaurant with your parents. Whether your parents pay the bill or you pay the bill, the restaurant owner, for him, it's money making, so it does not matter who pays the bill for him. 2, 3 things new have come here. So let's talk about that. First one. If you remember, as a director of a company, if I provide services to the company, example, I'm a director in, let's say, Reliance Industries, and I provide services to Reliance Industries, the company pays the tax under RC. But as a director, can I give other services also to Reliance? Example, my office in Mumbai, can I rent it out to Reliance? Yes. But in that case, this is not services in relation to becoming a director. These are other services, and hence these will be subject to tax under FCM. So in the exam, if they say director related services, RCM, and director providing other services, then it will be under FCM. Remember guys, RCM or FCM, government wants GST. Next. Guys, this is the government, and in many cases, the government also provides services to you and me via the recipients. Example, when you book a railway ticket on Indian Railways AC, you are paying GST to the government. So in 4 cases, the government collects this GST and pays it to their brothers. And these 4 cases are basically under FCM. So this could be a good question in the exam. What are the 4 cases in which GST is collected by the government? First, T, transportation of goods and passengers. I just give you the example, guys, of railways. Other than that, also, other than railways, also, if there is any collection, they will collect it and they will pay it. Example, you go to the railway ticket line, book an AC ticket, there will be GST. You pay the government, they collect it and pay it. That's called FCM. Next, railway and renting. I'll just change this renting. If the government rents you an immovable property, again, this one also, guys, you will pay the government and they will pay it ahead. Aircraft and vessel leasing, you wanted an aircraft of the government on rent. Again, you will pay them GST, they will pay it ahead FCM. And last, postal services. Example, speed post. I don't remember the last time going to a post office, but if you go to a post office and you do a speed post, in that you will pay GST to the government and they will collect it and they will pay it ahead. So these 4 things called TRAP: transportation, railway, aircraft and vessel, and postal services. These 4 services will be under FCM. This is something that maybe I've already spoken in class. If not, this is the first time you're hearing, and this is a good time to hear it. This director thing is definitely a first because they put in an amendment very recently. And next one is pretty unique, guys. Let's talk about that. Earlier, the government had said that if anyone rents out a residence, example, I'm new in Bangalore and I rent a residence in Bangalore, that residence will not be subject to any GST. It was completely exempted. But then lots of people started misusing it. They would take residence and then they would use it for office purposes. So the government made a rule now that the rule is called RRR. Here's the shortcut, guys. If it's a residential property given to a registered person, then there will be GST and under RCM, guys. This is a very good RRR. The movie was great. The shortcut is also really nice. And this will help you get your marks in the exam. So renting of residential property to registered person is under RCM RRR. Bearing one exception, if the registered person is a proprietor, then in that case there will be no GST. If you're confused, let me help you with removing that confusion. You are giving away a residential property. When you give away a residential property on rent to a registered person, then there will be GST under RCM. Renting residential to a registered person, RCM. Only time there will be no GST when that person who's taken the place on rent is a proprietor, a registered person, but a proprietor. All right, so these are the 3 things under charge of GST. Guys, this chapter is a nightmare, but with these 3 things, the government, sorry, the ICAI can use this as something that they want to ask you in the exam. Remember, this sheet, although I made it chapter wise, it has been given by ICAI only. So they obviously will question something from the sheet, definitely. All right, moving ahead, also looking, Soundarya, good evening. Everyone, good evening. And this is GST amendment. We are at chapter number 5, registration under GST. When you go to a shop, do you see that registration number outside? Yes, that means they are registered under GST. Now, there are some small details that have changed in the registration process. Let's try and understand that. First, guys, if you don't update your Aadhaar, if you remember our discussion, if you don't give your Aadhaar of course PAN, you have to give Aadhaar also, then they can come and physically verify your details, that where your office is, etc. But at that time, your physical presence is not required. Earlier, it used to be required. Now, a small change that your physical presence is not required. Example, if they come to your office, you need not be there in the office. It's okay as long as someone else is there, they will do a physical verification. Important? Not at all. Next, very, very, very important. Guys, when you register under GST, you know GST, everything is online. It's like Zomato. There is no offline thing, everything is online. Now, in this case, you have to attach your bank details when you register. And for some reason, if you don't have your bank details when you register, you need to update that within 45 days. That was a rule called Rule 10A. Now that, guys, 10A has suddenly found a new change. That 40 days has been reduced to 30 days. They say that bank details have to be filed within 30 days or before you file your GSTR1, whichever is earlier. Basically, they've reduced the number of days. They want your bank details faster now. And if you don't submit your bank details, they may suspend or cancel your registration. That's an important change. I have a feeling this can be asked in the exam somewhere or the other through an MCQ. Next, guys, today is a very, very, very Black Friday. Not because of anything else, but because your registration gets cancelled today. For some reason, it got cancelled, you've not filed your returns, etc. So you tell the government, I'm sorry, can you revoke or can you take away my cancellation back? The government says Section 30 revocation is allowed and you need to make an application within 30 days, which was a very short period of time. So thankfully, the government has increased this period now to 90 days. And not just that, in case for 90 days you are not able to do this, don't worry. You can make an application and the GST officer can extend it up to a maximum of 180 days. Important, maybe, so do this well. Earlier, this period was very, very short, guys. This period was just 30 days. Now they've increased it, thankfully. So if your registration gets cancelled, you have some time to save yourself. Next one is super, super, super important, guys. Extra attention on this one. Guys, this t-shirt, let's say I manufacture these t-shirts and I sell them on Myntra, Flipkart, etc. Earlier, if you remember, there was a section called Section 24. And in that, there's a shortcut called I creation if you've been my student. If you've not, I'll tell you what this shortcut is. They say that if you're an e-commerce operator, or you're a seller of goods like t-shirt on e-commerce operator, you need compulsory registration. That means, guys, I have to be registered on GST even if I'm a small player but I want to sell on e-commerce. So your friend who has a cheap t-shirt business, he can't sell on Flipkart unless he's registered. Now that was a big problem for people who were small business. So the government came up with a notification number 34 in the year 2023. The notification number itself tells you that's the latest notification. And they said, don't worry. Your friend who has a brand, a student of mine, guys, has a brand called Rough and he sells on e-commerce platforms. Now, for such people, the government says, don't worry, you don't need GST registration. So what do you need? You just need to sell on e-commerce operators, but you cannot sell interstate. That means if you're in Karnataka, you can only sell within Karnataka on e-commerce operators like Zepto, Blinkit, etc. Next, you have to have a PAN and you need to declare that PAN on the common portal that, listen, I am supplying on e-commerce operators. You cannot supply on multiple e-commerce operators in different states. No, only in one state. And you will be given an enrollment number whereby they will watch you. How many t-shirts have you sold? If you sold more than 20, 40 lakh, they will then need to register you. And once they register you, they will take back the registration, the enrollment number. So let's recap how this will be asked in the exam. Notification number 34 of the year 2023. In case a supplier of goods wants to supply goods on board an e-commerce operator, he can now do so subject to the following condition. First, cannot make any interstate supplies. So basically, you have to be on those e-commerce operators which supply only within a particular state, like Zepto, Blinkit. Second, he cannot be on multiple e-commerce operators in different states. In one state, multiple is okay. Third, you need to have a PAN number and you need to update that on the common portal and they will give you an enrollment number that is basically they're watching you. And finally, once you cross the turnover of 20, 40 lakh in that particular state, then you will have to get yourself registered and the enrollment number will disappear and registration number will appear. Perfect. Very, very important. With that, we finish another chapter. Remember, Rule 10A is important and remember this section 24 is also important. Yes, so guys, we are at halfway mark. Very good. As you can see, this document is of 3 pages and we are already on the second page and there's a third page, that's it. So we are moving ahead. But before that, guys, GST or DT, which one do you find easier? GST or DT? Tell me, guys, which one do you find it easier? DT or GST? What is the one you think is easy? Sanjay saying DT, but DT is vast. I appreciate Sanjay saying DT. Mehak is saying GST. Neha is saying GST. The Unisha is saying GST. The vote right now looks like for GST. Okay, good. GST is like a flat screen TV. New age, everything is done today because it's got in 2017. Whereas DT is like that big chunky TV which he had long back, which has been repaired many times. That's DT. So both are easy. Slayer Gaming YT, you are really slaying it. Perfect. All right, let's make easier with this next chapter called ITC. Let's see how this works and what are the changes in input tax credit. If you've been my student, you remember the shortcut called PC, which is not Priyanka Chopra. It is basically purchase leads to credit. What that essentially means is that if I purchase anything on that purchase, I can take credit as long as it's for business purposes. Guys, this is the concept. Let's move ahead. Remember that OnePlus guy who repaired your phone for free because it was under warranty? Now he used some spare screen. Can he take credit on that? Yes, obviously, because he's purchased that screen and he is using it for business purpose. So ITC can be availed on spares purchased for replacement or during warranty. Very simple, nothing difficult here. Next, you are someone who's under RCM. This is a supplier, guys, RCM. This is a recipient, and recipient does all the work under RCM, and he issues an invoice also. This recipient can take the ITC till the same time limits as mentioned under section 16.4. If you're confused, let me clarify. Today on the 6th of December, you purchase some services or maybe goods also under RCM. You paid the GST to the government. Government is happy. Can you take the credit today? Yes. Tomorrow? Yes. Next month? Yes. Next to next month? Yes. So after a few years, no. There is a due date. After the year ends by a shortcut called NA, that is 30th November N, or annual return filing date, whichever is earlier. So even in RCM, the same rule applies. This is also the same. That's what I wanted to clarify. Second point is this. Again, guys, not important, but done, and you can read it again. Or best, you can just come here and watch this video again and you'll be well versed with all the changes. Now, for all the people who get confused with RCM, I have a shortcut for you called LCC. Here the shortcut, what it is. This is a lawyer and this is a company called ABC, which is taking legal services worth 10 lakh rupees, GST 1.8 lakh, which the lawyer obviously will not charge. You have to pay this GST to the government under RCM. Now this, while understanding wise is great, how do you put it in the exam if this purchase comes in the exam? I'll tell you guys, the shortcut is LCC. What is the shortcut? First, this 1,80,000 will go in your liability ledger. Do you remember the liability ledger where you have IGST, CGST, SGST? In that liability ledger, because you owe it to the government, this amount will go. So 1.8 lakh, assuming it's IGST, you will have to pay. So first it will go to the liability ledger because you got to pay it. Next, can you take credit of it? Obviously, in the credit ledger ICS, again I can take credit of it. Why? Because it's a purchase. Purchase leads to credit. So first you'll put in the liability ledger. Second, you'll take credit also. And last, C, because it is an RCM tax, this liability has to be paid through your cash ledger. So in your cash ledger, you will have to put ICS. You'll have to put 1,80,000 here and make the payment. This is what I mean by LCC. It'll go in the liability ledger also. This liability has to be discharged through the cash ledger only, and you will also get credit. All three of them, repeating it one last time. Liability, because you owe it to the government. Credit, because it's a purchase, and obviously when you purchase something, you do get credit. And last is cash ledger, because RCM tax can only be paid through the cash ledger. Remember LCC, whenever DT is difficult, but the shortcuts is easy. Good to know, Ganesh, and all the best for your exams. I remember your doubts on WhatsApp as well. Guys, I don't know if you're aware, but I'm having a doubt solving session from next Tuesday onwards. I'll give you the details at the end of the session on YouTube as to how to join, etc. Next, guys, so this is great. RCM as LCC, this is important, not as an amendment, but something that you might use in the exam. Now, guys, after that e-commerce operator sale of goods notification, the second most important amendment is here, guys. Very, very important. Hear me out, understand this well. This is a rule called Rule 37A. It can come for 5 marks in your exam. Let's check out what this rule is, Rule 37A. I'll give you an example and we'll discuss this based on this example. There is a company called EBC, Electric Bike Company. For those people who know it, it's a company which sells bike. They are registered under GST and they buy batteries from Battery Supply Company, which is also registered under GST. Battery Supply Company has supplied batteries worth 1 lakh. On that, GST is 12,000 rupees. I'm explaining Rule 37A, important, and hear me out well. For EBC, this is a purchase which will lead to a credit. And let's assume this transaction happens today, 6th of December. So EBC, in their credit ledger, they will take a credit of this 12,000 rupees. IGST, CGST, SGST, I'm ignoring. They will just take a credit of 12,000 rupees. This is something they will take because it's a purchase for them. Now, the government is expecting EBC to pay battery supply company, and then battery supply company has to pay this to the government. Now, let's see what happens ahead. In the month of December, the story got over. You took the credit of 12,000. Life moved ahead. December became Jan became Feb became March, and ahead, battery supply company has not paid the GST to the government. This 12,000 rupees. What they've not done is they haven't filed their GSTR 3B, and even if they filed it, they've not shown this transaction there up till 30th September after the year ends. Example, right now is December, not Jan, not Feb, not March. After that, till 30th September, also they have not filed this return or they have not paid this tax. The government is super upset. And for something that is their mistake, you get punished. Check it how. The government says by September they have not filed this GSTR 3B. The government is upset and they tell you that listen, yeah, you took the credit, but I have not got the money. So when you file your GSTR 3B now for the month of October, you will file it in November because you get to know this in October. You will file your return in November. You will have to take this again and recredit this. That means, guys, reverse the credit. And if you don't, you'll have to pay interest after this due date of November. So repeating, you have taken credit. Yes, that's step number one. Government says no problem, take the credit. But if that guy does not pay the GST, that means does not show in GSTR 3B this amount by 30th September after the year ends, then you will get to know this in October. So the return that you file in November, you have to reverse this credit. If not, you'll have to pay interest, and GST interest is always at 18% from the day you took it till this date. But don't worry. After that, if finally BSC finally pays this 12,000 to the government, you can retake the credit, but the interest will go if you have paid some interest. Basically, what the government is saying that if he makes a mistake of not paying GST to the government, you will have to reverse your credit, and if you don't reverse it, then you will have to pay interest. But all this is not in this year, guys. It is in next year. I'm just reading. Rule 37A, reversal of ITC in case non-payment of tax by the supplier, and re-availment, that means recredit thereof. If the recipient, that is EBC, has availed ITC but the supplier does not furnish return in form GSTR 3B till 30th September following the end of the financial year, the said ITC shall be reversed by on or before 30th November following the end of the financial year. So he does not file his thing by 30th September. You need to recredit this by 30th November. If you don't, then you will have to pay interest. The amount of ITC which is not reversed will be subject to interest under section 50, that is 18% rate of interest under GST. But don't worry, finally, when the supplier makes the payment of tax, you will be allowed to take the recredit again. Guys, this is just the government taking revenge on you, that since I have not got my GST, how dare you take the credit? That's the logic, that's the idea. Slightly important, yes, very important, of course, yes, guys. Rule 37A is absolutely smashing rule. You need to by heart this, and this can be in the exam. The last question of GST, remember, is a theory question, and this can be there in the theory, Rule 37A, for 4 or 5 marks. Plus, guys, this notification number 34 of 2024, 2023, sorry, my bad. This can also be there for about 4 marks to 5 marks on how e-commerce operator, one person can sell goods without having GST registration. Next, we are moving to chapter number 7, 7, 8, 9, 10, 4 of them remaining, 11, 12. So all these are remaining. But in terms of page, only 1 page remaining, guys. Actually, the amendments are just 3 pages. Did you know ICI has put them in 45 pages? Don't worry, that's my job. I want to make it smaller for you. I want to make it shorter for you. So 45 pages of ICI versus 3 pages of mine. This is what I've tried to do. I've read all of those 45 pages so I could summarize them in 3 pages here. Interest is charged from 1st October or from the day the goods were purchased. If you don't reverse the credit, then they will charge you interest from the day you took the credit till the day you actually reverse it. Like a money lender, the government charges interest like a money lender from the first day to the last day. But Kalyani, since you asked that question, they will not ask you to compute the interest. They will ask you the provisions of Rule 37A. In that, you will have to talk about first you taking credit, the other person not filing GSTR 3B and not paying this credit ahead by 30th September, you reversing it by 30th November. If not reversal, interest, and finally, fifth point is recredit. These 5 points you have to write for 5 marks. Perfect. In RCM, who will get the GST credit? Good, Sanjay, good question. In RCM, the purchaser, always the purchaser. Forget RCM, forget FCM. So, Sanjay, I have a question for you. Answer. If I take services from a CA, I am purchasing, will I get the credit? Yes, purchase leads to credit. Same way, if I take services from a lawyer also, even though it's under RCM, I will still get credit because always purchase leads to credit. I hope there is more clarity now. We now go to the next chapter. I'll need 2 minutes of my time here. You can have a look at whatever you want to, and if there are any questions, you can ask me. We'll get back in 2 minutes, and this last one page is remaining. Yes, any questions? Happy to take them. So people who are waking up early these days, early morning birds, because I remember studying for my CA Inter early morning. I'm a morning person. What time are you waking up in the morning? Like, what's the earliest time you wake up and you study? 4 o'clock, 5 o'clock, 5:30. I remember keeping alarm of 4:30 and then getting to study at 5 o'clock. 11 a.m. 11 a.m. Clearly, Bharat, you're not a morning person. Anyone else? Like, what time are you? And if you're one of those who's counting hours, guys, don't do it. Count the quality, count the content you're doing, and not the hours. Honestly, 7 a.m., I think that's a little too late. Start a little early, and you'll see a lot more being done in one day. 4 a.m. I like that. 4 a.m. studies. If you're a morning person, that 4 to 7 a.m., that 3 hour slot is beautiful. No one messages you. There are no fresh reels posted for the day during that time. Everything is only books. So you can really study well that time. So good to know that. Anyways, we move ahead now to the next chapter, which is chapter number 7, payment of GST. As you know, guys, the first sum, question number 1, is on payment of GST. And if you're struggling with ITC and payment, I have a fast track course I'll be releasing between today, tomorrow, day after tomorrow, where in about 15-18 hours, you can revise every chapter of GST with ICI material questions, with all these practice questions. It's going to be released free on YouTube. Wait for it. Me and Yash's Academy both will post about it, so you can watch it there. But right now, talking about payment of GST, no amendments and no changes there, which is a relief, such a nice thing. Only thing I want to repeat is Rule 88A. Because guys, you know, when IGST is used first, then CNS GST can be used. All that rules and regulations are made by rule number 88A. So don't forget to quote this rule number to get those extra brownie points in the exam. Next, timer supply. A very, I sleep at 4 a.m. Bharat, nice. I hope you're only studying till then. I sleep at 3 a.m. Good, guys. Appreciate all the efforts. Let's look at the next one, guys, which is called timer supply. This, whatever I've written, looks very confusing, but it's very, very simple. I'll tell you what is happening. Guys, you're someone who's doing a very big work for the government, or for someone you're constructing a road, full road, guys. Bangalore to Mysore, Mumbai to Pune, Delhi to Noida. Guys, full road is being constructed by you. And it's not something that gets over in one day, guys. It's an ongoing process. And these kind of models are called hybrid annuity mode or hybrid annuity model, basically whereby as per your completion of work, you start getting the payments. It's not a small piece of work, it's a continuous piece of work that happens. And at certain stages, you raise an invoice and you get the money. Now, what will be the time of supply in this case? It's very simple. The government has said that this is a service, so there is section 13 and is under FCM, so section 13(2). As per the agreement, let's say 30% work is done and you can now raise the invoice. If you raise the invoice within time, that is 30 days if you remember, then it is IP, invoice date or payment date, whichever is earlier. If you don't raise the invoice on time, then the government says we'll not wait for the invoice. The provision date or payment date, whichever is earlier, will be your time of supply. What I'm trying to tell you is don't worry if something so heavy comes in the exam. It is the same as section 13(2). I'm not repeating section 13(2), guys. Just remember IPPP. What does it mean? The government says either the invoice date or your payment date, whichever is earlier, if the invoice is issued on time. And the invoice is issued late, then the provision date or payment date, whichever is earlier. That's it, guys. Nothing major on time of supply. This is very, very simple. If this road construction hybrid annuity mode comes in the exam, don't fear, just apply section 13(2). The next one is my favorite. It's an amendment that happened in one line for a chapter called tax invoice. If you remember, there's a concept of e-invoicing where you have to first generate a normal invoice. Then you have to go on an invoice registration portal, IRP, and then you have to generate an e-invoice and you'll get an IRN invoice registration number with a QR code. All of that you already know, nothing new, guys, in that. E-invoice is also applicable. It saves a lot of time and effort. It saves a lot of frauds. It eliminates frauds. A lot of advantages which we already have a shortcut. Boys and girls took PG on rent in SEZ. If you don't remember this, read your handwritten notes and you'll know what I'm talking about. But now, guys, e-invoice limit has been reduced to 5 crore. That means anyone who's had more than 5 crore turnover in any year since previous year 17-18 will be subject to e-invoicing. Example, in the first year of GST 17-18, your turnover was 6 crore, then this year e-invoice is applicable to you. Even in the second year, even in the third year, in any year since that year, if your turnover is more than 5 crores, then this year e-invoice, unfortunately or fortunately, is applicable to you. We go to the next one, returns under GST. And if I have to talk about the top 3 amendments, guys, this is in top 3 amendments. The first amendment which was top is that notification number 34, whereby you're selling goods on e-commerce operator. That was the top amendment. The second top amendment was that rule number 37A. That is the second second amendment of GST. And the top third amendment is this one, which I'm going to explain in the next 2 minutes. Again, guys, we'll take an example to understand this better. We'll go quickly and use the same numbers and same people. EBC is buying batteries from battery supply company worth 1 lakh rupees, GST 12,000 rupees, and they in their GSTR 3B they took a credit of 12,000 rupees. When battery supply company filed their GSTR 1, they showed somewhere around 12,000 rupees, which will be auto updated in GSTR 2B, 12,000. Everywhere 12,000 rupees, no mismatch, life is good, it's a perfect match, and the government has no problem, no complaints. But in case there is some mismatch, example, you are showing 12,000, the guy who supplied you updated and he said it's 10,000, and it gets auto populated in your GSTR 2B also as 10,000, and the government spots a mismatch. They feel this is not a right match, this is a mismatch. So what do? They send you a love letter that, dear assessee, sorry, it's GST, so dear registered person, we found that the credit you took and the credit as appearing in GSTR 2B have a mismatch of this much amount. Now it's stuck again, so I'm just going to wait. All right, back again. What about DT fast track? Same GST fast track, also DT fast track, both I'm going to be sharing. Wait for it, just a day or two, and you'll be getting both the fast tracks. All right. Next, guys, here we go. So if there is a mismatch, they will send you a love letter, obviously through email, and they will say that there is a mismatch of 2,000 rupees. This, now what do you do? Now where they have communicated to you, and this is called a rule called Rule 88. Guys, here we go. I'll show you the rule also here. 88D. This is very dangerous actually. And this rule applies only when there is a mismatch. The government says we've spotted a mismatch. Now you have two options. Either within the next 7 days, you explain to us how this mismatch has happened. And you have to explain it convincingly. And if you can't explain it within the next 7 days, then you will have to pay this difference. So one of the two you will have to do. Otherwise, they can levy interest on you on this 2000 rupees. This is called Rule 88D. Again, a very, very good question. So I'm going to read this. What is Rule 88D? Something that is very, very important today. Where the amount of ITC availed in GSTR 3B, that is 12,000, exceeds the ITC available in the auto generated statement in form GSTR 2B, that is 10,000, the said registered person shall be given a love letter, that is an intimation, on the common portal. The said intimation shall highlight the said difference and will direct him to either pay an amount equal to the excess along with interest or explain the reasons very convincingly within a period of 7 days. Such registered person, upon receipt of the intimation, either pays the amount within 7 days or gives an explanation. Otherwise, the amount shall be demanded to him, like the GST officer demands amounts under section 73 and 74, which is a CA final concept. Basically, that means they can recover that amount from you. And in case this rule 88D is not followed, that means the intimation you got and you did not give any reply, then you will be debarred. That means you will be suspended from filing the next form GSTR1 or IFF. That means you'll be handicapped because you'll not be able to fill this form up. So the other person will not be able to take credit. So no one will buy goods from you. So that means your business will go down. That means you'll go into losses and you'll have to go to UK. Basically, what I'm trying to tell you is this rule 88D is because of mismatches. Either pay the difference or explain the difference. Without that, they will suspend your GSTR1 or your IFF, and other people will not like this happening at your end. This, guys, is an absolute smashing 4 to 5 mark question in the exam. What is Rule 88D? It is a rule where the income tax or GST department sends an intimation. Why is the intimation? Because of a mismatch between GSTR 3B and the automated generated statement called GSTR 2B. What do you need to do? You need to reply within 7 days, either pay the difference of the amount or explain. And what happens if you don't? Then they can recover the amount under section 73 and 74. And they can also suspend your GSTR1 and IFF capabilities. 5 marks, 5 points, smashing question this one is. So these are three really, really important ones. Exemptions, just a few of them. Maybe I've already covered them in class. If I have, great. If I have not, then you can watch it from here. Guys, India is a very, very famous location for launching satellites. Sriharikota is one very prominent location, very apt location. And we don't do it for free. We charge money. We have a body called Antariksh Corporation, which charges money. ISRO also charges money. And when we do charge money, earlier this used to be exempt. The government said, why should we exempt it? So now satellite launch services are fully taxable. You will not just pay money to ISRO, but also pay GST. Next, if you're providing services to the government which are necessary, example, the government has to ensure water supply and you are supplying water, or public health, sanitation, waste management, slum improvement, all these services are you're supplying to the government, you will charge the money, but you will not charge GST because these services are exempt. Not the government anyways will not be charging GST on these, but when you also provide services to the government, even they will be exempt. Guys, if on the next holiday, if you take a hotel room, even if a cheap hotel room, guys, 400, 500, 700 rupees will also be subject to GST. Earlier, there was an exemption of hotel rooms up to 1000. Guys, that has now been removed. So everyone, the hotels are not very happy with this because it's made them expensive. But you remember, this one is now taxable. A lot of couples go for IVF treatment. It's basically test tube baby kind of a thing. And hospital charges certain money for that. Guys, India says this is also medical treatment and hence it is exempt from GST. The next one, guys, South India particularly loves its rice, but rice is not grown as rice. It is first made as paddy, grown as paddy, then converted into rice. So this conversion of paddy into rice, if someone is doing, then they will have to charge GST because they're changing the main character. Yes, difficult to digest, but you have to understand this well. So in the exam, if they say converting paddy into rice, this is a supply of service, will there be GST on that? Yes. However, having said that, the loading, unloading warehouse of rice, that will not be subject to GST. This is something that you have to keep in mind. It has been asked before in an RTP and can be asked in your exam as well. So keep this in mind while we move to question or chapter number 12. Guys, 13 and 14 are not highlighted, but they have no amendments, so I have not even considered them. Only 12th is the last one that we need to discuss. So, guys, everyone happy to go to chapter number 12, which is place of supply. In the fast track course, if place of supply is something that you find challenging, I have covered the entire chapter so nicely in that fast track course. Wait for it to do a nice revision on this chapter called place of supply. Guys, place of supply basically means that where is the place of supply? Example, if I am buying a laptop from Bangalore and I am also in Bangalore, then it's an intra-state supply. But if I am buying a laptop from Bangalore but I'm in Mumbai, then it's an interstate supply. So basically, place of supply matters to determine whether it's interstate or intrastate, which is great. But what if I buy something in Bangalore and then take it to Mumbai? Example, place of supply of goods purchased over the counter in one state and transported to another state by the buyer. So in that case, what will happen? Because there are two states now involved. So the government has said, listen, because there are two states involved, we will forget all these details and we will check that who is the buyer and where is his address. If that is known, that address, that state will be considered as a place of supply. And if that is also not known, in the rare case, then whoever is supplying that state, example, the laptop was bought in Bangalore, so the location of supplier will be the place of supply. This is an exception. Remember, and this is kind of important, not the most important were those three, but this is also important because in the exam, if they say you purchase it in one state and you've taken to another state, then remember it is your address which matters, not the state which you purchase it. And last, guys, we all love shopping on Myntra, on all different e-commerce websites. My favorite is Ajio. And when you buy these, sometimes your billing address and your delivery address are different. Example, I want to shop something for my mom who's sitting in Mumbai. So my billing address will be in Bangalore, but my delivery address will be in Mumbai. Then where is the place of supply? The place of supply is the billing address. Yes, it is the billing address. That's what they have confirmed, that the place of supply will be the billing address. This is very similar to a bill to ship to model. So wherever it's bill to, that is the place of supply. And with that, guys, in just about 53 minutes and 23 seconds, we've covered all the GST amendments that you had to cover for Jan 25 exam. GST amendments chapter wise has been done. Now, let me give you some bonus. We'll talk about some ABC analysis here. Here we go. GST ABC analysis. Have a look at what are the chapters and what is the order you should study in. So this is exactly the order you should study in, and you should do one exemption after every chapter. The day you come back from your law paper, start with value of supply. Small chapter will give you confidence. Then do supply, then do registration, then do TDS, go to sleep. Next morning, do charge of GST, place of supply, and then go to ITC and payment. Don't start with that, otherwise it will never end. Then returns, time of supply, e-invoice, GST sections. And last, if you get some time, do the introduction chapter, tax invoice, debit notes, credit notes, and accounts records, e-way bill. Guys, this is what is the order. Guys, also written here is Tuesdays. We are starting a doubt solving session for Jan 25 students. So this Tuesday, which is basically coming up on the 10th, in the evenings from 5 o'clock onwards, we'll have a Zoom live doubt solving session where you can unmute yourself and let me hear your doubt, and I will also reply with my solution, and you'll get very good clarity for your Jan exams. So that is something that I am looking forward. You will see a story, and on a Telegram group, you will also see a message about this Tuesday doubt solving session on Zoom. Saving this, I'll share this sheet with you guys. I'll also share this sheet with you guys. And last, I just want to talk about the GST important sections. These are the GST important sections. All the sections are from the CGST Act except one place, whereby it's from the IGST Act, that is place of supply. So these are chapter wise important sections. You can by heart these sections and go and write your exam very confidently. Again, three sheets will be shared by me, to you. These top sections, the ABC analysis, and of course the GST amendment. But my suggestion is, whenever you want to revise these amendments, You don't have to go anywhere else. Go. 55 minutes and 45 seconds will be worthy of an investment. Perfect. What about DT, Direct Tax Code Act 2025? Oh, ho, ho, ho. Someone who's giving Jan exam is worried about direct tax code. Guys, even Nirmala Sitharaman is not thinking about direct tax code like you are thinking. So take it easy, relax, study for what you are supposed to study, give your exam and do well. I'm sure what we supposed to be done is supposed to be done and we'll do it really well. I will see you guys now on Tuesday for the doubt solving session. I will attach this GST amendment list. Study well, be confident, pray often, be optimistic, and ask those doubts that are needed to be asked coming Tuesday and onwards. Ending the session right now, guys. Thank you. Hope you enjoyed it. Hope you learned well and hope you're doing well. All the best.